Welcome to day 8 of our 21-day forex trading bootcamp. So today we are going to discuss liquidity concept, right? Liquidity concept. So what is liquidity concept? Before I explain what is liquidity concept, let me tell you what you should look out for before you use other block to trade. In our previous video, I explain and sketch other block for you. I also tell you how to identify valid order block, right? So if you are using order block to enter a trade, then you have to look after the valid order block. Look after the valid order block. If you don't see valid order block, don't use order block to trade. Use price action instead. So when you are using price action, you need to understand liquidity concept, right? So first of all, if you are using order block strategy, go to 4-hour time frame or 1-hour time frame to confirm market direction. That is where you confirm your market direction if you are using order block to trade. Then mark out the break of structure. I explained the break of structure in our previous class, day 7. All right, then observe market shift. I explain what is market shift. I told you, if you miss any of this class, if you skip any one, you are not going to understand everything that I'm going to teach you, and you will not be able to analyze forex market. All right, so mark out the break of structure and observe market shift. Then wait for the price to retest the previous higher high. Then mark your point of interest and position your trade. I'll explain point of interest subsequently. Take note of this. Always observe the liquidity and use the closest order block. I've told you, use the closest order block. Make sure that your order block is a valid order block, right? Observe the liquidity. How do you observe liquidity? What is even liquidity? So let me explain liquidity for you to understand. Liquidity is a problem for smart money or market makers, not retail traders, because your account is not that big for you to wait until there is enough money in the market before you enter a trade. But smart money or market makers, they need liquidity before they enter a trade. They need enough money in the market because they always trade with huge amount of money. I am talking about $1 million plus. Yes, $1 million plus. All right, so smart money will cause you to lose your trades in order to add liquidity into the market to fulfill their large orders, right? Smart money or market makers, that is their target. They always want you to lose a trade, right? So that there will be enough money in the market. When you lose a trade or when your trade hits your stop loss, that is when you add liquidity to the market, because that money you lose is in the market. So any trader that lose a trade within that period have added money to the market. So there will be enough money for smart money or market makers to enter a trade with huge amount of money and make their profit. All right, okay, so now how do you spot liquidity? on different price action. That is the most important thing. I'm going to show you how to spot liquidity on different price action. That means I'll make different sketch so that anytime you are on your chart, you can easily spot the liquidity and avoid it or protect yourself from liquidity. All right, so you can spot liquidity when the market create equal highs and lows. So this is equal highs and lows. All right, so you can see the higher highs are equal. Right, here is your what liquidity zone. This is your liquidity zone, right? So now we have an uptrend. This is a downtrend, right? This is a downtrend. We have an uptrend, equal highs and lows. This is an uptrend, right? The same thing for your uptrend. So for your uptrend, this is liquidity zone. So if you spot your other block here, so this one is so this trend is inefficiency, right? I hope you remember. So if you spot your other block here, before you enter a trade, you have to observe the liquidity zone. This is the liquidity zone. So usually liquidity sweep happens here, right? Then we have swing highs and swing lows, or swing highs and lows. This is swing highs and lows for a downtrend. All right, this swing high, this swing low. Right here we have your liquidity zone. For an uptrend, we have swing highs and swing low like this. Here is your liquidity zone. All right, then we have trend line. This is a trend line, right? For uptrend, here is your liquidity zone. For a downtrend, we have something like this. This is your liquidity zone. Then we have for support and resistance. This is the market structure like this, either uptrend or downtrend. This is your resistance, this is your support. Here is your liquidity zone. Don't worry, when we get to the chart, I will show you so that you understand better. So if you cannot identify the liquidity, then you are most likely the liquidity. That's the truth. If you cannot identify liquidity, that means you will enter a trade that will not be profitable, and once your trade is not profitable, you lost your trade, definitely you are the liquidity, because you have added money to the market instead of making money in the market. So how do you trade against liquidity sweep? Number one, identify market structure. Then mark up your point of interest. We are going to discuss that one later. Then use liquidity concept to refine the point of interest. What does that mean? Don't quickly enter a trade when you see an opportunity, because when a trade is moving like this, going up like this, going up, and you enter here, right, the trade might come down before it will continue to go up. Automatically, when you enter a trade here, that means your stop loss will be around here. What happened? The trade come down, hit your stop loss, and continue to go up. This is market manipulation sometimes. So, and this is what we call liquidity concept. No matter how dynamic market is, once you get to the chart from today, you'll be able to identify liquidity zone and protect yourself. All right, let's go to trading view. So I'm going to show you two different liquidity zone. All right, so as you can see, the market consolidates here. You don't enter a trade at this level. You have to wait for the market to have a clear direction before you enter a trade. This is where retail traders enter trade. Don't trade with retail traders, trade with smart money and market makers. All right, you have to be patient before you see a clear opportunity to enter a trade. If you rush to enter a trade, you are going to lose money. You don't rush in the forex market. You wait to see your opportunity. The waiting is where the profit is. The waiting is where the profit is. So look at this level now. When the price touch our resistance level here at this point, what happened? It break the resistance level to continue to move down. But guess what? The price reversed back to break our resistance level in upward direction, right? Then after moving upward, then it moved down again. From there, it continued to move down. So if you enter a trade when the market make the first breakout at this point, you would have lose your trade, right? But if you enter a trade when the market make the second breakout at this point, you would have make profit. So now, if you see opportunity to enter a trade when market or price is at your support or resistance level, wait for the price to move in your direction, then retest, reverse back and retest your support or your resistance level, right? After the retesting and it give you head that it will continue to move in your direction, then you enter a trade. But if it doesn't give you head, then you have to wait for the market to give you head, a clear direction, before you enter. Because sometimes when it reverse back, it might break your level again, like the way it break the resistance level here, to kick out any trader that enter a trade at this level here and continue to move in a downward direction, right? So this point you are seeing here is the liquidity zone. You don't enter a trade there. So this market or this price that break out above our resistance level is what we call liquidity. The smart money or the market makers create this liquidity so that traders that enter a trade at this level here will lose their trade before the market continue to move down. All right, okay, let me show you another example before we close for today's class. So like I told you earlier, I mentioned that when I'm doing a sketch, you might not see some of the things that I'm sketching on chart because the market is dynamic. The shape of the market or the price might be different from my sketch, but with that idea of my sketch, you can easily know where your consolidation is or where your liquidity zone is. With the idea of my sketch, you can know no matter how the market fluctuates. All right, so that is why sometimes I take my time to do the sketch for you, so that when you get to your trading view, you can easily spot what I want you to learn or to know from the sketch. All right, so look at this chart here. This is your liquidity. Before we close for today's class, I want to give you an assignment. Go to your trading view, select Euro USD, then mark your support and resistance level, then mark liquidity at your support or resistance level and send it to me on WhatsApp. Thank you so much and see you next